You are losing a lot of money by not using chart patterns. Can you make money without using chart patterns? Sure. But you're likely leaving a lot of money on the table if you are putting on trades and you are not consulting a chart. Even if you're doing a longer term investment, you should still look at the chart. Are you buying at the low? Are you buying when the company that you're interested in is already very much extended? There's lots of reasons why we should consider a chart. It's not just trying to pick what spot we're going to get in. It's also how much are we going to risk? What is the trend in price? What's ultimately going to make us either be profitable or unprofitable is going to be the difference between where we buy and where we sell. So why wouldn't we want to have a deep understanding of chart patterns? In this video, I want to share with you some of the very basics of understanding chart patterns. One of the things that chart patterns does is it gives us time frames, and it lets us see what's happening on these time frames. What is the trend doing? So what we have right down here is a chart of the S&P 500. Actually, we have three charts of the S&P 500. We have a daily chart that is right over here. We have a weekly chart, which is over here, and we have a monthly chart. So what does that mean? That means that each one of these bars represents 1 day's worth of price action. Over here, we're looking at a week's worth of price action, and down here, we're looking at a month's worth of price action for each individual bar. So the first thing that I want to point out is when we look at, say, this daily chart up here, right? So this goes back to February of 2018 through, right now as I'm recording this, it's the end of June. And you can see how it's just kind of like chopped around sideways, right? And it looks like we're in store for some more choppiness based on this price action. But then when we come down here and we're looking at the monthly chart, it looks like a pretty clear trend. Like things are just still kind of like slowly moving up. Sure, there's a little bit of consolidation going on, but it's still a smoother ride up and to the right versus what we're seeing over here on this daily chart. So that's the first thing that charts do for us. They give us a sense of the overall trend on different time frames. So when we're considering our charts, we want to make sure that we are considering multiple time frames. We want to look at daily charts, we want to look at weekly charts, and we want to look at monthly charts. And if we're a shorter term trader, we'll also want to look at those intraday charts as well. The next thing that charts do for us is it allows us to figure out what the major players are doing, what the major mutual funds, hedge funds, pension funds, what they're doing, what these big players, the ones with billions upon billions of dollars, it lets us know if they are buying, selling, or trying to figure it all out. So how do we know when the major players are actively doing something? Well, we take a look at the volume on the chart. So taking a look again at this chart of the S&P 500, the volume is down here. It's typically at the bottom of the chart. If you are looking at a chart and you don't see volume, there is probably a very simple way to add the volume bars to your chart. Just contact your charting service or play around with the settings. It's very simple. It's something that's pretty standard, and you could add it right there. So we have these volume bars, and we also have this little shaded area here that I like to overlay. That shaded area is just the 50-day moving average of volume. So I know if volume is above average or below average. When volume is above average, that's those major players coming in and either buying or selling. And so we want to pay closer attention to those. So for example, we could see major activity on that day, on these days, over here, and all along over here as well. So something is going on in the market on those days, and so we want to pay attention to what's happening and how it's happening, and the why it's happening is kind of secondary, in my opinion. There's always going to be reasons why. We may think that we know the reason why, but the thing that's far more important is the what is happening, because it's the what that's going to trigger us to take action. If price is falling and we are, let's say we've decided to set our risk. If you watch some of the other videos, you know about risk management. If you haven't, I encourage you to check them out. But let's say that we decided to set our stop here and all of a sudden price falls below it. We could start to wonder why. We may start looking at the news, bringing up some blog posts, but the more important thing is that people with a lot more information than we have decided that the thing that we're holding is no longer worth the price that we thought it was, so it's falling and falling. So we can either try to figure out why, and maybe we'll be right, maybe we'll be wrong, or we can take action. For me personally, I prefer to take action. To me, it's these charts that are telling the story. There's the story that the media gives us, and there's the story that the market gives us. Pay attention to the story that the market gives us. One of the ways to do that, check out these chart patterns, check out what the volume is doing on those days. The stock market is a constant tug of war between buyers and sellers. And the way that we're going to see who is winning that tug of war at any given moment is by looking at the chart patterns. So back to this chart of the S&P 500. Over here, we could see that the buyers are clearly in control. Why? Because price keeps on going up and up and up and up. Over here, we could see that the sellers started to regain control and we got this violent sell-off. From there on, you get this sideways action, really going back all the way to this section over here in March, and it just kind of like is chopping around sideways for the past 3-4 months. And so the charts are going to tell us when there is a clear uptrend, when there's a clear downtrend, and when the buyers and sellers are still trying to figure things out. That's very, very, very useful information for us as people that are either going to trade or invest in the market, because we'll want to go with the predominant trend. If the predominant trend is up, then we want to be going along with it. If the predominant trend is down, then we can either choose to not participate if we only want to participate when the markets are going up, or if we're somebody that wants to sell short, meaning that we want to go with that trend and we can make money on the way down as well, then we'll want to consult the chart and see who's winning that tug of war, the buyers or the sellers. And then in those choppy periods, like what we've seen between March and present day, the end of June, then we need to come up with a different strategy as well. How are we going to take advantage of this choppy sideways action? There's lots of ways to do it. Some of them are a little bit more advanced for this particular video, but I'll be happy to share them with you in an upcoming series or in an upcoming coaching session. Stay tuned. So those are some of the very basics of chart patterns to help you start thinking about them in the right way. I hope you found it helpful. If you did, let me know. Let me know what you liked about it. If you have any questions about any of the stuff at all, please leave that down in the comment section below. I'd love to jump in and help you out. If you like this video, click that thumbs up button. That's going to help us out a lot. Make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.